Assalamu alaikum. How are you? Welcome to the last question for your SBR textbook, the Kaplan textbook from question and answer. So this is the last, even under your SBR lecture, you will find out. After this, I'll be moving from tomorrow. I'll be moving on to only the SBR lecture. The SBR revision kit. I think I have 20 more questions to do. So each day I'll be doing 2 questions. That means in 10 days, I'll be finishing all the questions from your SBR kit. So this question is different, no numbers. It's on integrated reporting. It's on writing part. Okay, you need to develop your writing part on theory parts as well. So this question is very important for that, and that's why it has been kept at the end, because you need to discuss also on how to analyze a company, right? This is a very important skill. So let's start with the requirements first. Okay, this is a short, questions are shorter, but you have to write a lot. Okay, so first one is discuss the limitations of financial reporting. Very unique question, right? Second, discuss the purpose and suggested content of an integrated report. So this type of questions very rarely it comes, because this is pure knowledge based. This is just for understanding purpose. Okay, what you have learned, we are going to cover it here. Let's see how much you have understood. What is the purpose and the suggested content? There are two things, separate things of integrated reporting. And finally, under part A, okay, the third one is discuss the extent to which integrated reporting addresses the limitations of traditional financial reporting. First is limitations of financial reporting. Second, content of integrated reporting. Third, how integrated reporting helps to overcome those limitations of financial reporting. You see, one by one they are building up. That's why it's very important that you do this question in the order that is given to you. Okay, part B, also we have some case study, and the requirement is in relation to the above issue, explain the likely benefit of the company producing an integrated reporting. It's very important that you understand the nature of this type of question, how to handle this type of question, because this type of question also you can get in SBR, right? I would say 19 you will get a question like that. There's no doubt. I will not give a percentage. If I give a percentage, then students will keep asking me questions, you know, to analyze and tell them I'm predict. See, I'm not a predictor. I cannot predict what you will get in your exam. But what I can predict is that if this question type of question comes, okay, you at least you can be prepared. Okay. I can predict that you are going to get this type of question, but how you're getting the exact type of question, that I cannot predict. But something similar to this you will get. That's for sure. There's no doubt about it, right? So let's start A, since it's a knowledge based and it's easier than part B. Part B is directly they are asking benefits of integrated reporting. Before coming to that, I think starting with limitations of financial reporting, then the content, it's easier to answer. So let's start with A. It is sometimes claimed that primary financial statements and disclosure notes do not satisfy the informational needs of user groups. Obviously, because you cannot get each and every information from your financial statement. They are numbers, pure numbers. They are just a snapshot at a particular time. But integrated reporting gives more information, right? So, particularly shareholders and other providers of financial capital. As a result, many entities now produce an array of non-financial reports. Integrated reporting, in particular, has received increased international recognition also. So, the IIRF outlines purpose and proposed content, although optional. It is hoped that preparation of integrated reporting by companies will address some of the problems associated with the traditional financial reporting. Why integrated reporting came into the picture? Because there were some limitations in the financial reporting that were faced by the stakeholders. That's the reason. Okay, but that does not mean integrated reporting eliminates the problem entirely. No, it reduces the problem up to some level, but it cannot eliminate a problem. Some inherent limitations will be there even after the integrated reporting. Now start with the limitations of financial reporting. These are very open-ended questions. You can answer them in any way. Okay, since there are no calculations, students often panic on how to get marks. How do I know it's correct? Because it's writing. No, see, I will tell you there are 6 marks. Okay, so let's say for 6 marks you can write 6 different points to get this answer. And if you see, these explanations are pretty long enough, but you can make it short, maybe in 1 or 2 sentences. Okay, or up to 3 sentences you can write under each. But what I would say, write 6 points. 1 point will give you 1 mark. So 6 marks means write 6 different points, 6 limitations of financial reporting. Okay, so I'm not going to read line by line the answer. Okay, but I'm going to explain what is there under each point. First is, one limitation is it is historical information. Number one, this order you can write it in any way. It's just an answer. You can write it in any order. That's okay. Number one, financial reporting is in historical information, whereas integrated reporting, on the other hand, they focus on the future. They are future oriented information. For example, your profit and loss, your statement of financial position, those are reporting what happened in the past, a year before. You're just recording it. Understanding. So it does not provide such useful information for the future. And by the time you're preparing the financial statements, they are published. Okay, most of the information might be out of date. Okay, because they'll be several months late. Understanding the information that is presented to the stakeholders. Second limitation is unrecognized assets and liabilities. Not all the assets and liabilities that is useful might be recognized. Okay. One example is goodwill. If your goodwill is internally generated or internally generated intangible assets, any asset. Okay. IFRS standards say do not recognize, but most of the value you must have got from there. One good example is for this is tech companies. You must have seen my video on tech companies. If you haven't, go through and check it out to understand this point better. In tech companies, what is the problem with the tech companies like Facebook, Twitter, Uber companies, and lots more are there, right? Amazon. What's the issue with them? See, most of their value. Why are they so valued? They are valued very highly. But if you go and see their company, they will not be having huge amount of non-current assets. They will not be having stocks build up. But then how they're so much big and valuable and powerful? Because their power lies in their intangible assets. Understood? This intangible assets are very valuable. This is giving them value. The software that they're using, the technology, their customers, their employees, the knowledge that they have, these are very valuable to them. But they cannot put it in their financial statements because IFRS standards say do not recognize internally generated, intangibles. So they cannot recognize it. That's why it's undervalued. They cannot recognize assets and liabilities. It's undervalued. Understood? For those companies. So one limitation is that also financial reporting. Because some of the companies, maybe their reputation, their success is through their employee skills, but you cannot recognize employee skills, right? So that's a limitation. Number three, clutter. This is very easy to understand. That now they want stakeholders, they want extensive disclosure. So they're disclosing so much that actually stakeholders find it very difficult what is important, what is not. Because so everything is disclosed. Okay, so clutter. Number four, financial and non-financial information. They give very little importance to non-financial. Rather, they give financial information only in the financial reporting. But integrated reporting solves it because they give non-financial information also. For example, they give the six capitals and then they explain how they are going to achieve value from the six capitals over the short, medium, and long term. That is not explained in your financial reporting, in your statement of financial position or statement of profit and loss, or even in the statement of cash flow. Understood? What are the risks that you are exposed to? How are you managing this risk? Is it explained through your statement of financial position? Can you understand? No. Number five, estimate. You have to make a lot of estimates for preparing the statement of financial position and all those things. It's very subjective area. So comparatively, when you have to compare the two companies, becomes very difficult because one company might be estimating in some other way, the other company might be estimating in some other way, right? For example, depreciation rates. One company is using 5% depreciation rate on a straight line basis. Other company is using same 5% depreciation rate but on a reducing balance basis, right? So profit and loss will be different. Two companies, the comparison will become very difficult, and you can easily manipulate also, right? Because they are subjective to achieve a particular profit. So here they have given you examples also. Now, six, use of historical cost. But remember, just see how the 6 points they are presenting to you. They are not just writing all the points together, not also in bullet points 1, 2, 3, 4, 5, 6. Not like that. Don't put numbers. Put proper subheading like this, and under the subheading, you have to explain. Okay, when you're typing now, because on a CB platform, you're typing it, you're not writing it. So it's very easy. You just have to bold out your subheading. That's it. Make sure that your subheading stand out. Okay, make it bold and all those things. So historical cost, like some standard you have to use historical costs. Some standard are using revalued model. Okay, even though, for example, IS 16 and IS 38, intangible assets and tangible non-current assets. Under both, they say okay, measure at cost and measure revaluation model. But under IS 38 intangible assets, you cannot use revaluation model if active market is not there. Even if that option is there, you cannot use it. So one is using it cost model, the other one is using a revaluation model. Very hard to do, very hard to compare. Okay, because some are using cost and some is using fair value model. Very hard for the stakeholders to compare the company. So these are the 6 issues with the financial reporting. Now we are moving towards the purpose and the content of the integrated reporting. Let's see the marks. Here also 6 marks. So let's say 3 marks for purpose, 3 marks for the content. Okay. You see here, nothing you are reflecting from the case study. This is pure knowledge. So this you can, the purpose you can write it in, you can divide it like 3 paragraphs you are going to write under this, or 2 paragraph is up to you. If you see the first paragraph, it's pretty long enough. Avoid this type of paragraphs. Don't write too long paragraphs. Okay. This is just a model answer, that's why it's there. But you try to make it shorter. Okay. Not too short. It should not be that you are writing 10 paragraphs and each paragraph is only 1 or 2 lines. It's not like that. Don't be so, what do I say? Be practical. Okay. Just see. 5 to 6 lines is good enough for a paragraph, I would say. Okay. So integrated reporting, basically they're defining what is it. It's a concise communication. So all these are purpose. Basically the purpose is, you will find in the definition. Concise communication is very concise, to the point. So all these things you can talk under the purpose. It talks about the organization strategy, their governance model, their performance, their prospect. All those things are not explained in financial reporting. You see, what is the external environment, what is their value that they are going to create in the short, medium, and the long term. Okay, and this value they are going to talk in terms of the capital, not just financial capital. Financial reporting only talks about financial capital, only one capital. Integrated reporting talks about other 5 types of capital. That means 6 capital in total. Okay. So integrated reporting is saying that if you want to maximize your financial capital but at the expense of other capital, it is not sustainable in the long term. You cannot sustain it like this. You also have to focus equally to the other capitals like human capital, social, natural, relational, manufacture, all those things. Okay. Now, another purpose. Who are the key users? Answer this question of the integrated reporting. Mostly the providers of financial capital, the one is giving you loan and everything. They want to say this, or the press or the government. Okay, let's say press and all. Okay. So integrated reporting will help this user. What is their purpose? It will help them to assess the long-term performance. This is the purpose. Whether the entity will continue to perform for long term or not. Now we are moving to the content. Even content and purpose, they are under the same requirement. But when you're writing it, you have to differentiate it like this: purpose, and then you're talking about the content in a separate, using separate subheading, and under that, writing it in a paragraph. If you see, the content is built from the purpose only. Okay, it is principle based, it's not rule based. So that, because it's a principle based means very broad. It does not prescribe KPIs to be disclosed, key performance indicator, but it should cover the following elements. This following elements has to be there, the content. Okay, from the purpose hold, let's pick out organizational overview, external environment, governance, opportunity and risk, strategy and resource allocation. I think more is there down, all those things, but you don't need all those things. Maybe you can just write few things because it's for 6 marks only. You don't have to write all this, but they have given everything from the textbook. Performance, business model, fit, outlook is represented. Maybe out of this, maybe any 3 you can give to get the 3 marks. So 3 content you can give. Okay, I'm not going to explain each and everything. Is there in your textbook. I have explained in the lecture under integrated reporting. You can go there and see all those things. Okay, but at least out of this, any 3, okay, I can explain. Let's say start with organization overview. First 3 I will explain. Rest all just see. Organizational overview means what does the organization do? What your organization do? Is it into teaching? Is it into giving some services? Are you freelancer? What are you doing? Okay. And What are the circumstances, the business environment, the external environment that it operates under? What is the regulatory environment, basically? Governance. What is the organization's governance structure? For example, do they have strong culture that says no to bribery? Do they have the committees? For example, non-executive director is there, the audit committee is there, the risk management committee is there, and what else? Internal control. Do they have strong internal control? All this other governance structure only. Because through this only they can create value in the short, medium, and long term. Opportunities and risk. What are the opportunities? If a technology is coming, what opportunity could this be for the company, and what are the risks that they're going to face? Because this will affect their ability to create value over short, medium, and long term. That's why it's important that you include this here, right? Opportunities and risk. And how the organization is dealing also with them is very important. If there's a risk, particular risk, how the organization is dealing with this risk. For example, you have a risk to your safety risk is there. Your employees are not safe in the workplace. How are you going to deal with this? What are you going to do? What are you going to put in the company? What measures are you going to take to make sure that your employees are safe? Okay. For example, I be very specific. You have to be very specific. Okay, concise. You cannot be very broad. We are doing this. For example, you are telling them to wear the safety hat or the safety shoes or something like that. Okay, rest all you can go through it, right? I don't think I have to explain each and everything, but exact content is very judgmental. It depends on your, it's from judgment to judgment, right? But most of the time what you have to include in your integrated reportings are material issues. Okay, and you have to say, justify why they are material. Okay, now we are moving on to the benefit of integrated reporting. Before that we have to read the requirement. Sorry, still we didn't reach to B. It's the third one. Limitations of traditional. Okay, the extent to which they will overcome the limitations for 5 marks again. So 5 points you can give for the third one also. Okay. So one thing, just look at the limitations and look at their content and try to build up an answer. Okay, so they focus on value creation in the medium and the long term. They are forward looking. They're forward looking than financial reporting. Already they're overlooking because financial reporting is backward. This is forward. So because of this, it will help user groups to make decision. Financial reporting, they say value only in terms of profit and cash. If you're having higher profit, higher cash, that means you're valuable. Integrated reporting says they look at more holistic view. They look entity from different perspective, not just profit and cash. And this is sustainable also. If you want to invest in a sustainable entities, this is of a particular use. Next. So 5 things you can talk about. Okay. This is first, let's say one. Now number 2. Different paragraph you can use. So issues of governance and risk. These are very prominent within integrated reporting. But they are missing from financial reports. You see, integrated reporting is helping here to overcome the limitation of financial reporting. Because these are the key that your future success depends on this. These are the key factors, your risk and the government. If your risk is very high, success is at a risk. Third, employee skills. Employee skills and the expertise is neglected in financial reporting, but in integrated reporting, it's very important part. Then fourth and fifth, maybe they are together. Okay, because after that we have B. But remember, they cannot solve entirely the problem. There are some issues that are not addressed by integrated reporting. What are they? Assessment of materiality. Still, you have to make a judgment to say what are material items that you have to include in integrated reporting. And also the KPIs that you are going to present under integrated reporting are very subjective. So it's very difficult in this case to compare the two integrated reporting of the two different entities. Can you compare? No. Because each will be using different KPIs, which is very subjective, and materiality, what they are going to put might be different. So still there will be some bias there also in what they are going to put in the report form. Okay. And this is very true if no assurance is there. That means no one is auditing this report. Because usually integrated reporting, no one audits it. Financial statement is audited by an auditor. So that gives it more assurance, right? And some say that this is another form of clutter, more information, because quantity of information increases and it becomes a headache to go through each and every information. Now with B, I would like to end this question series here, right? For SBR before I go to the revision kit. So excited to finish this off. This is basically about benefits that you have to talk for this company. They're specifically told, okay, don't give general benefit. When they have told about a company, to say the benefit for the company, right? 8 marks. So eight, that's maybe 4 benefits you can give, you can explain, and you will get 2 marks for it. So Team 10 is a company involved in developing and manufacturing scientific instruments. Team can. Okay. They have a large team of highly qualified research scientists. Employing these motivated and skilled members of staff enables them to produce most innovative and desirable products, which are sold at high margins. Employee is very low. With few employees leaving, that means employees are very satisfied to work with them. Okay, very few are going for the competitor. And their working condition is flexible, commitment to staff training, and high rates of pay. So in this case, integrated reporting is going to benefit in a number of ways, because all this they can present under integrated reporting, which will not be there in the financial reporting, right? Okay. According to I-38, why they talked about I-38? Because there are some intangible assets also that are there. Okay. Such as from a team of skilled staff and from training to meet the definition of an intangible asset. Okay. So according to IS-38, first of all, you have to define whether you can define it as an intangible asset or not. Okay, they have an insufficient control. They do not have so much of control on the team or the skilled staff, even though they are going to receive benefit out of it. Why? Tomorrow the staff can go to your competitor, right? Leave you and go. So that's why it does not meet the definition of an intangible asset. This means that money spent on employee training will be expense to profit and loss. Correct? Because you cannot recognize any asset. You cannot say your employee is an asset in this case. You do not have a control over them to the employee expertise. Users are unaware of his value. Okay, you don't know the value of your employee's expertise. So no asset. You just expense it. Now, what about employees? Employees, they are likely to be the greatest asset for the Team 10 company, right? And also the detail of this will be very important for their long-term success, because integrated reporting, they say that value in terms of the 6 capital. Okay, in this case you can say they will be categorized into human capital, the employees. So they have to make an extensive disclosure about their staff, because it will benefit them, because most of the values are in their employees. So they have to make an extensive disclosure about human capital. Okay, then so they are commitment to staff training. One by one they are telling staff training, the expertise. So staff training, this will be disclosed as a net increase in the human capital will increase because of this. Okay, so this human capital, if this increases, will lead to a greater increase in financial capital also, because better the employees, they will perform better and more finance will come. KPIs such as details of expenditure on staff training, this will enable the users to assess and compare their commitment of its staff over time. So when you're presenting the expenditure on staff training, for example, for 5 years, let's say, they are presenting the detail on how much they're expending on their staff training. So for the user, this is a benefit. Why? They can compare easily whether the training on staff is increasing or reducing over the time, or are they actually spending on investing for their staff, or they are not. They can also include KPIs also, key performance indicators, such as their staff turnover, because these are very important for this company. Values on their staff, so staff turnover, whether staff are leaving or not, the staff pay, how much they are being paid. So this help the users to compare also this to the industry averages. Okay, so because when you're disclosing this investment, okay, whatever the investment in employees, in the integrated reporting, how they are going to help, stakeholder is going to get a confidence. that their performance, okay, about the tin can's performance. Now, they have to disclose risk also, not just the good side, not just the benefit side, risk also that may threaten their sustainability of the business model and how they are going to manage the risk. Okay, so for instance, in this case, what is the risk that the tin can could face? The risk that he is going to face is that other companies also may try to recruit his employees through the offers of higher pay. Maybe the competitor companies are willing to pay higher than tin can is offering their current employees. So employees might go there because their values in employees. It's that they are at a great risk. So in this case, it's possible that they might even lose their market share to their competitor. How? Who may pay lower staff salaries, develop cheaper alternative products. So if this are disclosed, this risk and this benefit are disclosed in the integrated reporting, it will help the user. Why? They can ascertain what is the sustainability of their business model, how sustainable Tin Can's business model is. Through this, they can see. So this will also encourage the providers of financial capital also to invest if they want to give loan to this company or not. This will help them also. It will be encouraging for them also. Okay, so this is quite easy. From your common sense also you'll be able to write this type of answer. So with this we have finished all the questions under question and answer session from my SBR curriculum textbook, the last chapter. From now on I will be just focusing on the revision kit questions, the 20 questions, and the questions will not be in this playlist, it will be under the SBR revision kit solution playlist. So till then, see you and take care.